Yeah, I mean, I had 1.25 million on the Thunder to win the championship this year. That lost, obviously. That's my biggest loss. Not fun.
Welcome back to another edition of the Business of Betting podcast. I'm your host, Jeff Edelstein, senior analyst over at InGame. I'm joined today by Chris Dierkes. He is the head of trading at Novig. Chris, welcome to the show.
Thanks for having me. Excited to be on.
So, this industry is so fascinating to me in that I feel like there is so much that everyone assumes to know, present company included. But when push comes to shove, if somebody asks me, well, what does the head of trading at Novig do all day? I'd be like, I have no fucking idea. so let's start there. Why don't you explain to everybody and obviously we're a very gambling forward audience you're talking to. What is the day-to-day of your job with Novig, and how is it going to change, if at all, when you guys make the official switch over to from sweeps to prediction?
To be clear, I think you already know this, Jeff, but Novig is an exchange, not a sports book. A very big difference. And currently running a sweepstakes model. We hope to, fingers crossed, sometime next week, be officially, on the board of there, but maybe it might take a little bit longer. And we hope by NFL season to be, fully up in all 50 states as a CFTC certified exchange. The death knell of an exchange is no liquidity. Most people want to go in and just take liquidity. They don't want to sit there and patiently wait for the best price. They want to just take what's available. So really what we do as trading is making sure that every market has some base amount of liquidity. Mostly the niche markets, a player prop, an alternate line, a first half line, or in America, when it's not the World Cup, like soccer, some like challenger tennis, or like those kind of tournaments where there's not a lot of liquidity. We make sure that everything has liquidity, and we're posting both sides at what we would hope to perceive as some edge to us. And if people come in and trade against us, we move to try to balance the book as much as we can, though we are fine taking directional risk. And all really my day-to-day is making sure that liquidity is good across the entire board. And there's some spots where we want to take directional risk, going more aggressive, maybe shading our edge so it's, perceived to be no edge on one side to the market and a significant edge on the other side, so we get one-way action and we take these directional risks. But for the most part, my number one job, my number one thing every day is making sure that Novig exchange has enough liquidity so that any random user can come in and trade against, whether it be us or another customer. Because the nice thing is we provide the initial layer. People come in and they offer better prices than we as trading might offer. So we're not even the majority of trades. We just provide that nice level of baseline. And then we also take directional risk when I see fit or we see fit.
To that end, I mean, how well do you sleep these days, knowing that this is 24/7, 365?
It's funny. When I was on the other side of the counter, I used to think man, how do people let injuries get picked off and all this stuff? And here I am every day. People are picking us off with injuries and, they get information before we do. It's not fun from that point of view. If I could kill 1% of the trades, my life would be 100 times easier. Just 1%. 99% of the time it's easy, but that 1% really gets you.
Give us the bio here. How did you end up in this world? Because you didn't grow up necessarily thinking that this was going to be your path, correct?
No, not really. I mean, it's funny. When I was a teenager, I always wanted to say I wanted to be a professional poker player, but this is somewhat similar. And I did kind of start out that way, but I graduated college in December 2020 with a degree in computer science from Virginia Tech, had a software engineering job and played poker part-time on the weekends and most weekdays after work. And from, eventually found someone else who's into sports betting at the casino. He told me something about Pinnacle and Pinnacle is a very good source of truth. And I was like, what does that mean? Looked into it. I'm sure you've heard of Odds Jam, found Odds Jam. And then from there fell in love with sports betting. And then really I've had a job for the majority of my career. I was at a family office before this, Stan Druckenmiller's family office, if you're aware of him. And before that, I was, engineer at a defense contractor in Microsoft. But the majority of my time was spent betting sports. Then I was briefly a professional trader or professional bettor for probably 6 months before I took this job at head of trading. And really getting this job was pretty easy. I was one of the bigger winners on the Novig exchange. And when I told Henry, who I'm sure you're aware of, was hey, I think I'm interested in joining the team. It was pretty, I didn't really need to prove myself at that point.
If anyone was doing a 30 under 30 type of thing, you'd probably be like pretty high on the list in this industry. Have you found your youth to be a benefit, a hindrance? Like, like how's that working out?
Definitely a benefit because I think a lot of it is just like grind. So like I remember a couple of years ago, I was staying up until like 3, 4 a.m. to bet some like tennis or whatnot. And I have like totally fine with doing it. There's times where I was, I was waiting for a line to post and I was sleeping on my couch to not disturb my wife and waking up every hour to make sure that I could get it on top. So I can't imagine if I was in my like 40s or 50s, I'd have the energy to do that.
You won't, I assure you. I could look into the future for you. We had talked previously for another story when we had talked about the 90% tax situation. I mean, you had said that you might not have even gone into this job if it was not for that. So blessing, curse, a little bit of both, waiting to see what happens, or
Yeah, I think a blessing. I mean, I still like that's definitely some percentage of my decision was based on that because I think it increased with that tax increase. I think a lot of people are not going to be fully abiding by the law or taking aggressive interpretations of it as another way to describe. And I don't have to really do that. I don't have to worry about that. I still think the law is ridiculous the way it's written and it should be. But I tried my best to try, I had a lobbying group with a bunch of other pros to try to get it taken down or at least acknowledged in a different way, but that didn't work out. So overall, I think it was a blessing because I really love where we're at right now. And I think Novig as a whole is poised to really, really do good in this industry.
yeah. Well, I mean, it seems like the prediction market model seems to be getting more entrenched every day, records being set every day. And I mean, that's like the obvious workaround at this point, like, because it's not gambling according to the feds, so it seems like, it's going to work out that way. What about I'm going to put you on the spot a little bit here. Your position on, like right now, it feels like if you ask the average person in the street about a prediction market, they'll know Kalshi. I think Kalshi and Polymarket to a lesser extent, they have definitely like made their way into day-to-day lives and conversation. I just saw Timothy Chalamet is now doing ads for Kalshi, so like, I mean, they're really there. I also think that there is some obvious pushback from a lot of corners of the media world when it comes to this. And I think a lot of it has been brought on by themselves, Kalshi and Polymarket. You're trading against your friends. You're not, I mean, so like, what do you think needs to happen from like kind of like a PR perspective for this industry to solidify itself and kind of be seen much in the same way that we look at like, the finance world?
Well, I think it had a different angle. I hope I'm not coming off as negative towards the guy, but when I was working for the family office, Stan Drefferman was one of the most successful macro traders of all time and, worth billions, hugely successful. He would say, I think half serious, half joking, the casino opens at 9:30. Like he viewed like finance as that. So I've always viewed finance as largely gambling for the most part. The only exception to that is truly the people that buy ETFs and hold for 30 years. But that is actually just a small subset of people. Most people are using Robinhood to day trade. That's not investing or finance the way I think it should be perceived. So to me, it's like, I just view them all the same. Like there's no real difference between the two because they're just huge swings. There's an edge in investing. Like, why is it that some people can invest and make ridiculous returns like what Buffett or my former boss himself, and others, they go bust and they fail because there's an edge, just like there's an edge in, sports trading. So I view them largely the same. And when I've said before, if they're fine cracking down on restricting users from having like 0-day options trading, day trading, and they put massive restrictions on that, then I'm fine. Like, okay, we can start separating them. But until that happens, they should all be treated the same. And this is just the way the world is right now.
Yeah, I'm not the first person to coin the term, but it's the gamification of America, And yeah, my position has always been if I'm taking $1 out of my pocket and hoping to get it back $1.05, I'm gambling. Whether it's investing in the stock market, betting the game, buying a baseball card, whatever, buying a house, like whatever it is. If I'm hoping to make more money than I started, it's a gamble. I just don't understand how anyone sees that differently.
I would agree with that, but people use that definition as investing. So I mean, I can call it investing. I believe when I buy stocks, I'm gambling, but it's called like investing. So it doesn't, I can say the same thing with like when I'm trading sports. You can say I'm investing, or you can say it's gambling. To me, there's no difference. And I don't care like how people want to describe it for whatever like legal reasons, but to me, relatively the same. I don't see a difference between the two. If we want to call them all investing, fine with me. If we don't, also fine with me.
Well, I mean, I think, the prediction market industry is definitely seeking to get to that point. I mean, I don't know, from your youthful perspective on it, like you're generationally speaking, like we asked my generation to say, oh, this is gambling. Your generation, do you think it's being pitched differently, on the socials and stuff? Do you think is it hitting differently?
It might be, but what I would also say is what I push back is like I would say that like a lot of sports trading, like you have like a far greater chance of having success in that than a lot of times like day trading and stuff like that in the stock market. So it's far easier to win in sports than it is in stock market. So I think it's easier to like classify as investing from that point of view. Whether people actually believe it deep down, who knows? I think the unfortunate truth though is majority of Americans believe they have an edge in all things, whether it's the stock market or sports trading, and they don't. But that's going to happen. That's going to exist forever. I mean, there's a classic study where it's like you ask, like, are you an above average driver? And like 80% of people say, yeah, I'm an above average driver. Well, not everyone can be above average. Someone's got to be below average.
I worked for a company called Civic Science. They're an awesome, awesome company. And like oftentimes if you see like an online poll, it's probably from them, and I had access to their backend. I would write for them. I was able to see basically, hundreds of thousands of polls that they've taken over the years. And yeah, anything where you were asked to rank yourself, driver, how good looking you are, how smart you are, it was uniform. 75% of people thought they were above average, right? I know I am, right? But yeah, I mean, so it's interesting. It is an American thing. When they do it in Canada, when they run other countries, it came in around 50-50. America, we all think that we are better and smarter and better looking and a better driver. And yeah, obviously we all can't be.
Honestly, from that point, I mean, the fact that I didn't realize that America, I thought it was uniform across all of the world, but if it's only an American thing, maybe that's why we've been so successful as a country this last like 50 to 100 years.
Right. We're like, yeah, no, I mean, of course we can do it, and we're going to go ahead and do it. Speaking though to, how a lot of people like obviously are going to lose, are you finding, I guess from a business side and also from your life, on the other side of the counter, do you think the recreational user is more at risk in the exchange model than they are in like just the old fashioned, I'm going to bet a game or I'm going to bet a prop, win or lose, with the swing, with the exchange model, the ability to get in and out of markets and the theoretical better price that you start with. As a recreational user myself, I feel like I need to pay a lot more attention if I'm going to be investing my money in exchanges than I would if I was just taking a bet.
I've seen this argument a lot. Like I saw you had Matt Kalish on, a couple of weeks ago, and I find like that argument to be quite ridiculous. Exchanges are going to have better prices on average. I mean, if you go odd screen, you will see Novig at the top of basically every single market. We almost always have the best price. And on top of that, like this consumer protection, Matt Kalish can talk all he wants about like responsible gambling and stuff like that. I have used these apps before quite aggressively. I know the truth behind it, and it's a joke. Responsible gambling from the sportsbook side is pitiful. It's just very, very predatory. So if you have these sportsbooks preying on problem gamblers and stuff like that, and you get better prices like this in the exchange, and most exchanges, they don't even have like these same types of VIP programs. You're getting better prices. You have typically more access to get in and out of traders. That's good things. That's actually better for the consumer. Yes, I will concede there's some things where it's like confusing to people. It's like, wait, what am I doing? Am I buying this or am I selling this? Sure. And there's probably going to be some small learning curves for people in the beginning. I would concede and I would agree that probably the first 3 to 5 days on an exchange, it's probably worse for the consumer because it's a new product. Like if you're doing the same thing every day, you're going to be worse when you change, but it's clearly better for the long run. And I would encourage everyone to try to learn and get better because it's not that hard to figure out how the exchange works. Once you can use it, it's clearly a better product for the user. But unfortunately right now, what I think we see is most people, they see this. If you're expected to lose, say $2,000 on a sports book. Sportsbook's going to give you back $500 in promotions, profit boosts, et cetera, et cetera. So they're going to lose $1,500 for the year, or they're going to lose $1,000 on an exchange for the year based on better pricings. People are going to choose the sportsbook because they feel like the getting money back is so much better, even though it's like objectively worse for them. The better pricings of the exchange vastly outweigh what you get back from the sport, which is why I would encourage everyone to use an exchange and just be price sensitive. That's the biggest thing. I'm not even saying always use Novig. As much as I would love it, but shop around. Always pick the best price, and if you can do that, you might even win even if you're not that informed.
Now, when you were on the other side of the counter, the idea of, the long held belief, never take a cash out offer from a sports book. They're lousy, blah, 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 which is probably good advice. If I'm outside of having like my own algorithm telling me what to do, should the average bettor be like trading in and out of like positions? Like when the Mets go up 1-0 and I'm up 12 cents?
Yeah. So the reason that's typically not the case in the sportsbook model is, if you make a bet on like some of these apps and say you bet like the Knicks Spurs spread and you bet $100, your initial cash out, the odds haven't moved. Your initial cash out might be 90% of that value. So you might be able to cash out at $90 because they typically charge an additional like 5 to 10% tax on that cash out in addition to their house edge, right? That was already baked in for that one. It is so much worse all the time. The big difference between an exchange is because it's peer-to-peer, even if some of those peers are much more sophisticated than you, they're not taking an additional, like if I had bought the Spurs and then I sold the Spurs at halftime, that's equivalent to making a live trade on the Knicks on an exchange. And you'd get the same price cashing out as you would just making the trade if you didn't have a previous action. On a sports book, it's actually a worse price. I shouldn't say always, but majority of the time it's a worse price because they charge an additional fee for the cash out. And I would encourage most people to look at this if they use sports books. Don't cash out, actually make an additional bet instead of cashing out and you get a better price. So that's why I think it's different for the exchange side is if you can cash in and out and there's not this additional fee, there's still a market maker baked in edge or, a market implied edge to get in and out of liquidity. So from that point of view, I'm not going to encourage you guys, like the general public, to be trading in and out all the time, but it is better and there's going to be more opportunities for the exchange. I would say, generally put, never cash out on a sports book and except in very rare occasions. And in an exchange, I would say lean to not cashing out except in slightly less rare occasions because you still have to pay an additional edge to the implied market makers, et cetera, et cetera.
Big picture for Novig. I mean, Polymarket, Kalshi, DraftKings, FanDuel, Underdog, Coinbase. I mean, my Aunt Gertie, I think, is starting her own exchange. What's going to be the separator? What's going to differentiate Novig? I can't imagine that we're going to wake up in 2, 3, 4, 8, 12 years and see 17,000 different exchanges.
I think it's quite likely that the exchange models in 5 years, we see exact replica of what the current sportsbook industry is right now, where it's like DraftKings, FanDuel, and then you got 3 to 4 other kind of players that are fighting for the scraps. It's just a question of, is it going to be 1, 2, or 3 real exchanges at the top? We hope it's probably just one, or it's just us, but you never know. I would say the differentiating factor is like right now is fees and a better app experience. I mean, I think if you ask more people, they find Novig to be far easier to use than the other 2 big exchanges, which are Polymarket and Kalshi, obviously, for the app experience. And we offer no fees, whereas they offer fees. So it's typically better pricing. So that's a big differentiator. Tricky thing, as I talked about earlier, is really educating the public that price matters. That's difficult. If we're unsuccessful in that, then our edge of having no fees might really not matter. And the only edge we would have would be the better app experience. But if that's it, it's going to be tough to compete. So we hope to educate people that, hey, you should really be looking for the better price. Like if you can bet, or if on one sports book versus another sports book, you should always take the better price. If you can trade on an exchange, you should always look for the better price. And more times than not, we have the better price than a Kalshi or a Polymarket because they have fees and we don't.
Yeah, I mean, the pricing, it's a difficult sell, right? I'm in New Jersey and, I watched Prime come to New Jersey, and they had the better price on every game all the time. Like, it didn't matter. Alex Kane and Sport Trade, better price all the time, and it just didn't matter. For the vast majority of recreational bettors, they have one or two apps on their phone. They want to bet the Yankees. They go and they bet the Yankees. They don't care between minus 112 and minus 108. And as someone who I consider myself smart enough when it comes to this shit, half the time, you know what? I just want to put $5 down. I don't give a shit if I win 10 or $10.20, even though I know I should. But like, so it's a hard, and what I think what it comes down to, like with DraftKings and FanDuel, they've done, obviously they did a very, very, very good job with marketing. Nobody thought when PASPA fell that DraftKings and nobody in the industry thought DraftKings and FanDuel were going to rise to the top. No one saw that coming. They had the DFS list, and they were able to do it, but the marketing push obviously was huge. Kalshi is so far ahead right now, I feel, on the marketing tip, like word of mouth, that I just don't think price alone is going to do it. And I'm just not sure what the answer is. And I'm curious, like, do promos, like heavy promos, come to this world? Is that doable even?
I think it is. I mean, we do currently offer some profit boosts for parlays and stuff like that. And we hope to be able to get that in the seats. It's tricky though. I mean, we're blazing new ground, and I think that's another thing we might be able to do. Who knows? I mean, for me, I'm not on the legal team. I'm not on the marketing team. I'm just there to make sure that the exchange is running smooth from a liquidity point of view. So I hope the smarter people on those teams figure that out, and then I get all the credit for it, or for not all the credit, but I get all the benefit of it. But yeah, it's going to be really tricky. And I unfortunately agree that I think we need a good marketing strategy to really take down Kalshi, because they have a big lead right now.
Completely off topic. I'm just curious for those of us watching on video here. What's the frame behind you back there? I see a lot of like small words.
There's no words there.
Oh, it's just art?
Yeah, it's just art. I don't know. We just moved into this new place. We had a designer just like put them up. I'm like, okay, looks good to me. Just art. It's no words.
And look, I'm seeing it from a distance and on a computer screen. All right, fair enough. You never know. It might have been like the original Declaration of Independence. Who knows?
No, nothing interesting.
Some of your bets have caught the eye of people. You had $1 million down at one point on
the boxing. The boxing. Yeah, as Anthony Joshua or Jake Paul. Yeah.
So when you are doing something like this, like in your brain, like where's the difference between I have an edge and this is like a no brainer to like holy fucking shit, what the fuck am I doing?
That one was interesting, where it's just like, look, I'm a big believer in the Kelly criterion. I'm sure you've talked about that before, well aware of what it is. Just like based on your perceived edge and your bankroll, how much percentage of the bankroll you should do. And I think what happens to a lot of people is they start out with maybe a $10,000 to $100,000 roll and early in the career, and they're used to betting 500 to maybe a couple thousand a game. They have some big spots. They maybe bet 10% of their roll at 50,000. That's 5,000. That's a huge sweat for them. And then, as they grow and grow, they stay at, 5 to 10,000 is really their max they go. But for me, it's just like, if you're comfortable betting 5-10% early on in your career of your bank, you should have no problem doing that later in your career too. The percentage is the same. The numbers are just bigger. My roll, my bankroll was not just $1 million. I didn't put my entire roll on it. It still represented a percentage of my bankroll. And then for that, just the edge there, I thought was pretty significant. For these spots, I love them because they're very easy to explain. It's like every single person in the public thinks that is either a Jake Paul fan or thinks it's going to be rigged in Jake Paul's favor. Anthony Joshua is actually a top 3 to 5 fighter at the time, and potentially of all time for his weight. I mean, he was very good. Jake Paul is not even a top 100 fighter. Anthony Joshua had 30 pounds on him, higher reach than him. So he has a skill edge that also Anthony Joshua is a already decorated and very rich fighter. Why would he ruin his reputation and career to rig a fight for Jake Paul? It's very illogical to me. There's also rumors of him having another fight, and I think the Saudis were backing it or something like that. That was also worth tens of millions of dollars, maybe even hundreds of millions of dollars. So he can make, to me, it's pretty easy to understand Anthony Joshua's point of view. I get to make $20 to $50 million to beat the shit out of Jake Paul. Like, why would I not do that? Like, this is a huge win. And from Jake Paul's point of view, it's like, okay, you got to take a couple punches, you got to get your ass beat, but you also make, tens of millions of dollars. I'm sure lots of people listening would take a punch for $10 million. So it made sense why the fight is not rigged. And then from a pure analytical point of view, we've never seen a bigger mismatch in potentially all of sports. How often do you get a far more talented fighter, bigger fighter, heavier fighter? It's just unbelievable edge. So I had it if the fight wasn't rigged, I was assuming Anthony Joshua was winning 99% of the time. I mean that seriously. And my handicap was simple. He's going to beat Jake Paul 99% of the time. I assumed a 2% chance the fight was rigged because you still have to make some. I could be wrong with my assumptions. A 2% chance that Anthony Joshua just gets drugged out of his mind the night before partying and comes up and then just loses because he's high as a kite or whatever. And I conservatively make him 95% to win the fight. And you can buy him at 85%. So you're getting a huge edge from that point of view. And I'm like, how often do you get these edges where you're so likely to win? If you plug it in Kelly criterion, you can bet a large percent of your bankroll. I actually underbet what Kelly was saying, but at that point in my career, when I bet $1 million, I was starting to all right, if I lose this, I might vomit. So that was my limit. But yeah, that's just the thought process there is, some people think that you're picking up pennies in front of a steamroller, but I didn't view that as all because I thought we had a significant edge, or I had a significant edge on the fight rather, and just want to ride with it.
The way you talk about it, there's obviously excitement when you tell the story. Are you looking for these edges as much now than you were before, now that you're on the other side the majority of the time? Or
so part of the thing with because we'll be trading cross-platform, part of what our team will be doing is we'll be also, we hope to be trading on Kalshi and Polymarket as well, in addition to just providing liquidity for Novig. And that's something that will change during the CFTC. And because of that, I'm not able to trade on prediction markets anymore. And I don't really have time to be, trading on traditional sports books anymore. So for me, I'm not looking for those as much because as a market maker, we don't really it's harder for us to take those kind of directional risks. So they do come up, but they're really obvious spots and stuff like that. So it's really hard for us to have this. So I'm not looking for them nearly as much. I'm looking more to defend against people trying to do that to us.
All right. You have to choose one or the other. Which side of the counter do you want to be on for the rest of your life?
My answer would be this side of the counter that I'm currently on, contingent on PMs being legal because I think there's going to be a Supreme Court case. I think everyone is aware of that happens. If the Supreme Court strikes that down, which is, I have to acknowledge as a possibility, then no, obviously I want to go back to the other side of the counter. So if I knew that is my, whatever way that rules, if it's allowed and you guaranteed me that exchanges will be legal in 5 years and under the CFTC regulations as they are right now, absolutely the side of the counter, because we're building, it's you get a lot more resources. It's honestly more fun because you can be trading everything. You're more diversified from that. So you can still make solid profits and stuff like that while being more diversified. You get to work with a lot of other smart people rather. But on the other side of the counter, it's more aggressive, more risk-taking, and you're more lone wolf for the most part, even though if you do have some partners.
I'm curious now, this is just curiosity. So you really created some wealth for yourself, a nice bankroll if you're putting $1 million down on fights. Walk me through it. How did you go from, Wall Street financial kind of guy, young guy to finding odds jam and next thing you know, you're putting $1 million down at a time?
We made an LLC about 2.5 years ago that we mostly just bet on traditional sports books. I'm sure the pitfalls with it. You win, you get limited. We got to figure out ways to combat that. I don't really want to go in details on a podcast about that, but I'm sure you understand what I'm implying. From there, it's just it's really just execution and aggression. And like I said, most people, they get discouraged if you get limited early on and you lost money on account, you might give up or you get discouraged. And for us, a lot of it was just pushing through forward and always doing it. As you build your bankroll, some people don't increase the size of their betting. We always increase the size. So I remember when we first started, it was myself and 3 other partners. We put an initial bankroll of 120,000. And I remember a couple weeks in, I was like, okay, we have our biggest bet there. We had $10,000 on, I think it was Arizona minus 17.5 in a college basketball game 3 years ago. Can't even remember who he was playing. And I was like, the market was It was like 3 or 4 points off market. I was like, this is a great bet, great opportunity. I can't even remember if we won or lost, but I was like, that was huge to us. That was like almost 10% of our bankroll. I was like really nervous doing it. And then fast forward a year later, we're routinely making, our average bet is like 20,000 at that point. And then, a year after that, the average bet is like 40 or 50,000. So it's just like you continue to scale and scale as you grow. Like as we win more and more, we're not sticking with the same size. We're increasing that size. And then that's just like exponential growth from there.
Yeah, I mean, humble brag for me here. I started playing daily fantasy sports. I love DFS. I started playing it in 2014. And in 2016, I want to say, I was playing like $4 tournaments, hoping for the best. In a 1 week span, I came in second in 3 like giant lotto tournaments, and I made $25,000. And then I had a decision to make. I said, well, shit, I can like move up a notch and start putting more money into this. Or I can say, you know what? I can keep playing these $4 tournaments pretty much for the rest of my life and, just free roll and have fun with it. I chose the latter, free roll and have fun with it. And it's, I'm still having fun with it. I'm still playing every day. But part of me is like, kind of wish I like went for it back then. And it's not like the profit disappeared. I know everyone says it, but it's true. I am profitable. But that money, once it like filters back in to like my day to day, it's gone, So yeah, I guess if I were you, I would have gone all the way in, and maybe maybe you'd be interviewing me today. Shit happens. Talking about, you're young enough and this is recent enough, outside of that Joshua bet, any other like bets that actually like really do stand out?
Yeah. I mean, I had 1.25 million on the Thunder to win the championship this year. That lost, obviously. That's my biggest loss. Not fun. I also had 1.8 million on Brooks Koepka not to win. What was the previous tournament that was just that the second major? Was it the U.S. Open or I honestly can't even remember the major, but it was like 2 months ago. I should probably remember it. I had him not to win. He obviously did not win. So that was nice. I mean, the payout there, it's like you only win like 180,000 or so. But the reason for that one was simple. Like every single recreational person wants to bet or, trade on Brooks Koepka. I don't know why, but he's a fan favorite. I'm not really a big golf guy, and makes the odds really out of proportion. And I said, okay, well, I'll take the other side. This is a nice thing with exchanges. You don't have to, you take the other side of it.
To use the title of another podcast everyone knows, I mean, the risk of ruin when you're making these like large wagers for relatively smaller victories, like that, I think for most people, present company included, it would eat away at my soul knowing that every time there's massive risk of ruin, How do you do it?
Remember, it's percentage of your bankroll. Like I'm not betting like half my bankroll on those trades. Like it's still like less than 20% of the roll that you have, and you're going to win them very often. And you can just plug it into the calculator simulation. Like, and remember, if you lose the next trade you make, you got to size down now. So it's actually not as bad as people think. It's just like, you have to be willing to acknowledge that you might lose 30, 40, 50% of your bankroll on a very bad downswing. And now you have to like grind it back up via betting smaller. And that's the thing. So like, and ruin is defined by multiple things. Like I would not encourage this level of aggression if it's your only source of income. You have to constantly be taking from your bankroll, et cetera, et cetera. For me, like this is part of the reason why I always had a job. Is I was always like, well, if I go bust, how bad is being a software engineer? For the rest of my life, it's not that bad. But if I run good, maybe now I don't have to work if I don't want to. So that's another nice thing.
You mentioned you were married. Did you meet your wife before or after you got involved in all this?
Before. We met at Virginia Tech, and I was playing 25 cent, 50 cent poker with like less than like $10,000 to my name. So that was when she met me. So yeah, the funny thing is I'll tell her sometimes when we have like huge positions on. And for the Thunder game, I forget what game it was when they were playing the Spurs. She's like, I want to eat dinner outside. I was like, hey, can we eat inside so we can watch the game? She's like, no. I'm like, honey, we have a potential $2 million swing on this game. We win loss. And he's like, I don't care about that. Okay.
Outside we go.
And then I have to watch it, 30 minutes or an hour later. And I'm like, okay, great. I missed a bunch.
Oh my God. But like she just, whatever.
I think she sees the results. So she's like, she trusts it, but like, she doesn't really want to think about the swings. Like, I think it would make her puke. She's very risk averse. So it would make her puke to think about oh my God, we lost $1 million today, or we won $1 million. Like, she doesn't want to think about stuff like that. She'd rather just like get an update, once every couple months when it's like more stagnant.
It's huge. I mean, I think it's kind of like now to give you an idea for a story, it's like probably an underreported and underappreciated aspect of all this, even for people low stakes like myself. Like my wife, she doesn't want to know that I got $100 in DFS tonight. There's a level of trust that has to be part of the relationship, because money obviously is a destroyer. It could be a destroyer of relationships. So yeah, the level of trust has to be there. It's fascinating. But yeah, I guess right. It doesn't matter if it's $10 or $10 million. If there's no trust, there's no trust, and it's not going to work. But yeah, so yeah, now I got a story idea. I'm going to have to write that one down. 5-10 years down the road, where do you see yourself?
Really one of two options. Either still, trading as like the head of trading at Novig, trading across all the different exchanges, not including just Novig's, just trying to provide liquidity and, also make money for the company and whatnot, or probably retired, depending on what happens with the Supreme Court. If that gets shoved against us and it doesn't go our way and a lot of this just like crumbles, then yeah, probably just, I don't know, I'll retire, hopefully raise a family. And I mean, I'll be raising a family regardless, but like, yeah, but I'd be working or not, it's the only thing.
Let me ask you this. So of all the people I've talked to in the industry on, with prediction markets, everyone recognizes that the Supreme Court's going to get involved. Few people are as blunt about you saying, hey, listen, this thing could disappear tomorrow, so let's price it. What are you buying it at? What would you buy the Supreme Court saying, we're good, carry on?
Yes, 75 cents.
So you're confident enough, but not all the way confident.
Yeah, I know other people far more bullish on it than myself.
Fascinating. Chris, won't be the last time we have you on here. Chris Dierkes of Novig, thank you so much for joining us. Fascinating stuff. Continued success.
Thanks, Jeff. Thanks for having me.